Good morning, guys, and welcome to the show. Thank you for tuning in, and I'm really glad to have you guys here. Today is Monday, March 25th, 2019, and let's get right in there and let's take a look at what's going on. Listen, the markets are opening up just right this second. They just opened up, the markets. So we're going to take a look at the markets. Let's get right in there and take a look at what's going on. Let's start the charts right here, and the first thing we're going to take a look at is the silver price. You know, she was going up earlier this morning. She's still up 8 cents over the day. She started to decline just a little bit right there, you know. But she's still well within the higher side of her range, which is really, really good, you know. That's what we want to see. Now, let's take a look at the gold price today. We're seeing we're up $4.80, and it's dipped just a little bit just in the past few minutes, too. But it's at $1,318, so we're looking good anytime we're up above $1,300. Now, you know what? Gold and silver, it's really looking bright, the future for gold and silver. For you guys out there who are thinking, you remember the way of thinking not long ago, going back maybe 6 months ago and stuff, people were worried that gold, not gold so much, but silver, they were worried that the price was going to go down below $10, and they were worried that gold prices were going to go below 1,000. Forget it, guys. That's gone. That didn't happen, and it's gone now. I can pretty much almost say, well, it's my opinion that that's over. You probably don't have to worry about that. In fact, the only thing you got to worry about now probably is how far is it going to go to the upside so fast, and will you have any chance to get any more? You know what I mean? That's probably because the Fed's changed direction, and this is the reason why. Let me see if I can find that. I got an article here. 10 years into the economic expansion, unemployment near 50-year lows, rates still near historic lows, Fed balance sheet 4 times normal, and the Fed thinks we need stimulus. Naturally, all the market heard was the Fed is returning to the punch bowl. So, the Fed has given the market what it wants, it says on December. On rates, the Fed signals it's indefinitely on hold due to heightened risks in the global economy. And this whole thing, you know, the Fed is already turned. It's already changed directions. I didn't think that this was going to come so fast. I thought the Fed was going to hang diamonds longer and stay with their tightening schedule deeper into this, and that we were going to have a massive correction in the market that would force them to turn. That was my way of thinking, but I'm having to change my way of thinking because the Fed has turned and changed directions prematurely. So now let's get on and let's take a look at cryptocurrency today, you know. What we're looking at is it going sideways. Cryptocurrency's going sideways. We're looking at a price of $39.66, and it's a 50-50 to me. It's a 50-50 gamble at this point, whether she goes up or down. But there is one thing to consider. One thing to consider. The bears are starting to get a weak hand. The bears are starting to get exhausted. You know, the bears. And so we have to take this into consideration that any moves to the downside now are probably going to be fairly weak, not real strong, big moves to the downside. I'm not expecting any huge moves to the downside. So the downside risk potential is being somewhat alleviated, whereas I see the upside potential is probably greater. It probably outweighs the downside potential. Even at this point, I'm probably going to give it a 50-50 as to which way it goes, but it's definitely going to go in one of those two directions. It can't keep, Bitcoin just never can keep going sideways like this. It just doesn't work that way. Bitcoin doesn't work that way. Let's take a look at cryptocurrency market capitalizations. We're looking at $140.1 billion with a Bitcoin dominance of 50.6%. And we're looking at all the coins. Basically, it's kind of a mixed bag today. Some are going up a little bit, some are going down. But Litecoin is right on $60. So Ethereum is $137.15. XRP has lost a penny. It's down to 30 cents. EOS, $3.67. Bitcoin Cash, $165. Binance Coin is at $16. And, of course, Stellar is at 10 cents, 10.5 cents. Cardano is at 6 cents. So there we go. And now let's take a look at crude oil today. Crude oil is slowly been chugging upwards, and I see this trend still continuing, albeit going back to about March 14th, the middle of this month. It seemed to start to taper off its upward swing, and it's kind of been going along level ever since then. Ever since the middle of the month, it's been going on along level. So I'm wondering if they're losing steam, if OPEC is starting to lose steam on this rally. That's what it's starting to look like to me. Now let's take a look at the Dow Jones today. Where is my Dow chart? Crude oil. Let's go back here. Dow. Here we go. Here's the Dow. She's up 40 points on the day so far. And if you remember on my last shows I was talking about, I said the Dow would probably be up about 40 points, something like 40 points. Looks like I hit it right on the nose today. It's midweek. I'm expecting the turmoil when the vote comes in. Either Tuesday or Wednesday, they're going to vote on the deal in the United Kingdom. And that's what I'm kind of waiting for, to see if that causes any market turmoil. Now, we had a very bad down day on Friday, you know, and the markets lost a little bit of their steam. But we're going to have to keep our eye on these markets. Now let's take a look at bonds and rates. You know, we got an inverted yield curve. And it looks like the inversion's getting worse. You know, you're looking here at the 3-month on the yield curve at 2.45, and look at the 5-year, 2.23. It's considerably lower yield on the 5-year. Even the 10-year is lower yield than the 3-month. This is a yield curve inversion. This yield curve inversion, what we're waiting for, what I'm waiting for, is the U.S. 30-year to invert. That's what I'm waiting for. That's the one I'm keeping my eye on, is the U.S. 30-year inverting. So let's take a look now at the dollar index. And we're looking at the dollar index moving downwards a little bit today, but albeit slowly. It's at 96.5. The dollar, you know, has really been staying strong, considering what the Fed's doing now and how the Fed's starting to pull back from their quantitative tightening. One of the things we have to consider, it's a big point I want to make, is that the U.S. dollar index is affected more by what the Fed did 6 months ago than what they're doing right now. And what they're doing right now, 6 months from now, will have a more profound effect upon the dollar. There's a lag period here because the system is so large, you know. It reminds me in the old days, you know, when they used to have carburetors on cars. Sometimes if a fuel pump wasn't working correctly, you know, you'd have to pour gasoline down the carburetor to actually feed what was called trickle feeding the engine. You're feeding it through the carburetor, through the top of the carburetor. And when you'd pour that gas in initially, the first 1 second, nothing would happen. That gas had to make its way down into the pistons and stuff, you know. Well, the system is much larger again, and there's a delay. If you start to remove liquidity from the system, what happens is there's a delayed response. And if you start adding liquidity to the system, then there's a little bit of a delayed response. 6 months to a year. That's how long it takes the system to react to what's being done. So the dollar is still actually reacting to what the Fed's doing with quantitative tightening, which was removing liquidity from the system, which makes the dollar more dear, which makes the dollar higher, the dollar index. And so that's still supporting the dollar, even though the Fed's now starting to move in the opposite direction. So this lag into the system, this lag time, the only way they can avert this lag time is if they do massive stimulus. then what will happen is then the lag time will be shortened, you know. So this is one of the things we got to look at. Listen, thank you guys for listening to this market report, and stay tuned. Tomorrow we'll have another market report, and I really enjoy having you guys here, and we thank you very much. And give me a thumbs up, guys, and we'll catch you in the next show. Bye bye, guys.